The JP Morgan Nasdaq Equity Premium Income ETF, or JEPQ, JEPQ, has quickly grown to be one of my favorite buy and hold covered call strategy ETFs that I've been holding now for over a year. Now in this video, we're going to go over the JEPQ ETF, see how it works and what it has to offer, and I'm going to go through and show you the exact math on how an investor, in theory with just $50,000 invested into a high quality covered call ETF like this one, could in theory retire with a boatload of cash flow and even potentially early. Now, if you own JEPQ or have ever thought about it, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, before anything else, over here on the JP Morgan Asset Management website, it says JEPQ's overview is follow. Seeking consistent premium income with lower volatility, JP Morgan Nasdaq Equity Premium Income ETF seeks to deliver monthly distributable income and Nasdaq 100 exposure with less volatility. Now, the way the portfolio works is pretty simple. It's a lot like a lot of other covered call strategy ETFs. It says underlying equity portfolio employs an applied data science approach to fundamental research and portfolio construction, and disciplined option overlay implements written out of the money Nasdaq 100 index call options that seek to generate distributable monthly income. So in case you're not very familiar with covered call ETFs, generally speaking, they a lot of times work a lot alike. They often will own a basket of holdings. In JEPQ's case, as of right now, around 91 different holdings, things like Microsoft, Apple, and Alphabet. But for the most part, they buy a basket of holdings, benefit off the price moves and dividends, and then on top of that, sell covered calls to generate a lot of premium from the options. And then with the dividends/premium, they're able to pay massive dividends to investors like you and I on a monthly basis. Now, the reason over the last year that I've grown so fond of JEPQ compared to other ETFs similar to it like qyld or even jepi, JEPQ has grown a lot in the last year, and the ETF has really shown what it's capable of in a market where everything seems to move up. So much to the point where even though this is a covered call ETF, and even though it does have some upside being capped because of the covered call option overlay, this ETF is still up 22.11% as far as just price return goes, which is insane considering, once again, it does utilize a covered call strategy and still does pay a massive dividend, which I'm going to show you here in a second. Some more important aspects about JEPQ: it does have an expense ratio of 0.35%, which is sort of in line with most other covered call ETFs, but it still is going to be more pricey than something like VU or SCHD, of course. The dividend frequency is monthly, and last year alone, JEPQ distributed $5 per share to investors. Now, we sort of touched on the holdings a little bit ago, but again, this is one of the main reasons on why I like this ETF compared to some of the other similar ones like jepi and others. JEPQ has a majority of technology in the holding breakdown, which is why, once again, we saw JEPQ run so much over the last year and really showed us all the potential of what it can do during a bull market. So you might be asking yourself, well, what's so special about technology, and why does JEPQ have so much of its overall holdings based in it? Well, the great thing about tech stocks in general is that they're known to potentially deliver significant growth. With technology advancements and innovations that are continuously going on, there is crazy opportunity in the market to make a lot of money and some major moves in the technology sector. Now, with the JEPQ ETF being so heavily invested in technology, it is definitely going to have a much higher beta. Now, market beta, also known as systemic risk or equity beta, is a measure of a stock or portfolio's sensitivity to the overall market movements. Now, the other biggest holdings are things like communication, consumer cyclical, healthcare, and others. But the top 10 holdings JEPQ are things like Microsoft, Apple, Alphabet, Amazon, Meta, and then of course a ton of option overlays. Now, looking into the dividends, which is one of the main reasons on why I even came across JEPQ a while back, but again, now that I saw how well it can perform during a market where everything starts to rip, JEPQ is definitely on my radar more than ever. But the trailing 12-month dividend yield for JEPQ is 10.17%, which is very beefy, again, considering this thing has grown so much in price over the last 365 days. Now, the dividend history for JEPQ is pretty similar to that of most other covered call ETFs. It's going to change ongoingly, and we saw some of the biggest distributions from covered call ETFs back in 2022, and since then they've sort of calmed down a little bit, with some of the months being bigger than others, but overall, again, anywhere from an 8 to 10% return from dividends alone per year, plus if we can seek some capital appreciation, I'm all in on an ETF like that. So now that you know exactly why I'm so interested in JEPQ and why I've been buying shares of it across my portfolio over the last year or so due to the massive price return potential that JEPQ has, the option covered call strategy that makes sense in most all markets, and of course the dividend. If we were to build out a model for a $50,000 investment into JEPQ with a $12,000 annual contribution on top of that, and dividend reinvestment being turned on, meaning that all the dividends on a monthly basis are going to be used to buy more shares of JEPQ over time. The outcome of this is pretty significant once again because JEPQ does have a massive starting dividend yield, but also does have the expected annual share price appreciation somewhat high considering it's a cover call ETF. Now again, these numbers are all just estimated, take it with a grain of salt, but this is what we get. So your number one invested into JEPQ, we would be at $5,500 per year in dividends. Now that's again substantial because of course that 10% starting dividend yield, which is higher than most other ETFs across the market. Now after the annual contribution of $12,000 per year on top of the $50K, which is just $1,000 per month, by year number two, $69,000 and $7,300 per year in dividends. Now of course for an investor, in order to retire off of this just $50,000 invested and the $12K contribution, they'd most likely have to be somewhat young at least because it is going to take at least a few years until the dividend income ramps up and until the power of compounding really takes place. But by year number 10, this portfolio would already be surpassed $331,000 and around $25K per year in dividends. Now by 20 years in, this investor would already have a $1 million plus portfolio of JEPQ with $56K per year in dividends, which again could surpass some people's salary even. And from year number 20 to 30, this is where the numbers get bigger and bigger, and at this point the annual dividends per year, just off of that $50,000 invested initially, could definitely potentially surpass a lot of salaries, which could even allow them to retire early off that just $50,000 invested initially. Now for me personally, as a 31-year-old dividend growth investor, I personally am not going to be investing too heavily into something like JEPQ because I'm not necessarily looking to retire today or tomorrow. But that being said, over the next year or so, I am very interested in adding a few shares of JEPQ into the portfolio to boost up the dividend income on an ongoing basis, because so far it's definitely been able to do so. Now lastly, I thought it'd be kind of fun to stack up the S&P 500's total return next to JEPQ's total return and look at both their performance over the last 365 days. Now again, keep in mind, JEPQ has not been around all that long, so I know over the long term, it's going to be hard for pretty much anything to outperform the S&P 500. But that being said, it is still sort of interesting that over the last year time frame, JEPQ has returned 36% more or less, where S&P has returned 23%. Now again, are the holdings within JEPQ going to keep trading the way that they have been? From here on out, only time will tell. We don't really know. But either way, like I said earlier, if JEPQ is even able to have a 8, 9, 10% dividend yield on a yearly basis, even if this ETF traded somewhat sideways, that'd be outperforming a lot of other stocks and ETFs across the markets. But now I want to hear from you guys down below when it comes to JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF. Do you currently own any shares of JEPQ in your portfolio? And if so, how many shares do you have as of right now? If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.